Oh, I got some juicy news for you. Profit First app version 2.0 is here. With an enhanced user experience and video guidance throughout, you can now be even more confident in your Profit First implementation. Plus, listeners who work with a certified Profit First professional get extra benefits. Check it out now at www.profitfirstapp.com.
Today, right here, right now, this is the moment that you will finally say,
I'm growing my accounting practice, and you're going to discover exactly how right here, right now,
on the Grow My Accounting Practice podcast.
Welcome back, everyone. I'm Ron Saharian, co-founder of Profit First Professionals.
And I'm Liz Sporn, guide here at Profit First Professionals.
And I'm Mike Michalowicz, author of Profit First. And guess what? You're listening to GMAP, stands for Grow My Accounting Practice. We are here to teach you the step-by-step on exactly that, how to grow your practice if you're a bookkeeper, if you're an accountant, or a coach. And we do it through a great guest interview, including today's interview. Plus, Ron has insider access, something he's developed for our office we think you can use over at your office. And I have a GMAP Now task. The one task, if you do it, you'll see results by the end of this show.
Awesome, guys. Don't forget to subscribe so you never miss an episode. You can find us on any podcatcher out there. Make sure you like and subscribe. All right. Welcome back, everyone. And this episode is brought to you by Kick, the newest in accounting platforms. Profit First Professionals has partnered up with Kick for some pretty cool opportunities. So check out Kick, K-I-C-K. Tell them Profit First Professionals, and Ron and Liz says hello.
Yeah, that's great. They're going to be on the show. Conrad will be on the show in a couple of weeks. I was chatting with Ben, one of the guys that works with them.
Yeah, so if
they're so excited.
Looking for an alternative to QuickBooks or to Xero, definitely check out Kick. They've got a lot of AI things coming down the road as well, too. That's going to be
we
cool.
love a good disruptor. We love a good disruptor.
Yeah. So you were saying earlier, Anna got her lacrosse photos, huh?
Oh, don't we love it when the kids have their photos? Yeah, it's so fun. So I watched the seniors do a really cool photo shoot on the river in downtown Nashville, and they were doing just a cool photo shoot. And so I was like, did you not get to do the cool photo shoot? But yeah, no, they're preparing for a wonderful lacrosse season at Vanderbilt University. Let's go. We're going to hope that they can beat a 50% win percentage.
And see, Liz, it is true. My lacrosse photo is in black and white.
Yeah, well, that I knew.
I'm not even that old. I didn't think I was that old, but it's in black and white.
The kids were looking at my yearbooks a couple weeks ago, and all of the pictures are in black and white. And they're like, did you not have color cameras in the 90s? I was like, we did, but they were really expensive. And we're in nowhere, Ohio. So that's what we got.
Yeah.
It's hilarious. But yeah, those photos are great. The team looks great. So let's go.
Speaking of great, I think that's a segue to bring in our next guest. I'm really excited to be talking to Brandon Hall. Liz, go ahead.
Sure. Brandon is a CPA, a national speaker, and founder and managing partner of Hall CPA PLLC. He works with real estate investors, syndicates, and private equity funds to optimize taxes and streamline accounting. Okay. Before launching his firm, he worked with PwC and Ernst & Young. And Brandon also owns a 25-unit real estate portfolio, including multifamily, single family, and short-term rentals. We are very excited to have him. Hold on. I'm going to do what I did last time because I liked it. Let's see what is unique. What? I don't even know what this means. He's a high driver and willing to take risks and iterate on. I went to marijuana. This is where I was like, a high driver? You drive high? Where he's willing to take risks and iterate on ideas and process. That's not what he's doing, everybody. Without further ado, Brandon, explain yourself and welcome.
No marijuana here, but my name is Brandon. Yeah, nice to meet you guys. I appreciate having me on the show.
Yeah, thanks for being here. Yeah, he's already like, oh boy, what did I get into? Yeah. What does that mean though? What's a high driver? Is that a personality trait?
Yeah, just relentless.
I like that.
Okay. Yeah.
Okay,
and I think I put that as unique just because I would say like in general that's not that unique, but I think in the accounting space it's pretty unique.
Agreed. We say that for our members here at Profit First Professionals. I lovingly say that they're not normal, and they're not, right? They are ahead of the curve. They're early adopters. They love learning. They love community. They don't have scarcity mindset. Like it's a cool community to be in because they just know they go to other conferences and they're like, oh, right. I forgot. We're not normal. Right. I forgot. That's great.
Brandon has won a couple of awards, and one of the things that really stuck out to me that that we were kind of talking a little bit about before is going from basically startup to 14 million in about 10 years, right? And so, can you take us through that journey? I mean, that is wonderful. And I know that you're the CPA realtor guy, so I'm assuming Niche got in there, but could you tell us your story of your background and, how you got to where you are today?
Yep.
Wonderful is a nice way to put it. A lot of it did not feel wonderful. Yeah, no. So my approach to building this firm originally I was working at PwC and EY, and just didn't see myself like growing a career there. There was a lot of ego involved at the time. Like I thought I was the smartest person in the room and could do it all these different ways, and they didn't care about any of my ideas. I didn't want to wait around 15, 20 years to make partner. So so I just decided to bounce
Miss your
out.
kids growing up, all that fun stuff.
Yeah.
Yeah, exactly. Yeah. And so I decided to bounce out and do my own thing. And my big premise was this was 2015-ish that I really started building this. And so my big premise was that I could work remotely and serve as a client as long as I have an internet connection. So all clients had to be okay with that. And that I was going to just service real estate investors, and if I could do these two, and I wasn't going to track time. Those were my three big things. I'm going to service real estate investors, work remotely, and not track time. So just measure results. And at the time, I thought it would just be like me and 2 or 3 people. I didn't think I would ever grow it to something like this. But I quickly realized that I had something good going. I had a lot of lead flow early on. I was on the Bigger Pockets podcast, which was a forum for landlords. It's since become pretty saturated, but at the time it was like me and 2 other accountants on there. So that was a good initial bump of lead flow for me to sort of springboard into doing this full time. I sort of moonlighted a little bit and jumped in, did this full time, and got a salesperson was my first hire. That was actually a mistake, by the way, but the first person that I hired.
Did you see my face? I was like, huh? Wow.
Yeah. So I had so many leads coming in that I was just like, I'll do the work. I just need somebody to do the sales calls.
Yeah.
It should have been in reverse. It should have been, I'll do the sales calls and I'll hire people to do the work. But this is, I had a very immature understanding of business at the time. So did that, started hiring contractors, then full-time people, and just kept scaling it. And what I have learned is really the key to success in any sort of accounting firm is you have to have a sales pipeline that overwhelms operations. And if you don't have that, then you have a sales problem. In every firm that I talk to, they'll say, I don't have a sales problem. I close 2 clients a week. And I'm like, cool. How do you close 20 a week? And until you can get to 20 a week, you have a sales problem. And then they'll say, well, I don't have any time. And I'm like, well, that's the sales problem might be a symptom of another problem. But at the end of the day, you have a sales problem and you have to go solve that. Otherwise, you're going to grow 5, 10, 15% a year, which is great. That's fine growth. But you can absolutely grow 30, 40, 50% a year, and you can sustain it if you have that pipeline that you can count on confidently. You can hire right into it. And so that's what we've done here at the firm. We've historically grown 40+% per year. Wow. All organic growth, all through digital media, digital marketing. We get referrals now, but it's like a small percentage of our total growth. And we've got it all measured out. We've got data points at every point in the process that we know.
Let's get now we're getting
this is awesome.
into it. Oh,
please. I can hear people crying. They're like, what? Wow.
Right.
I want it.
So let's get into this. You mentioned marketing. Okay. You're spending, are you spending money on marketing ads?
No money.
No money. Okay.
No money.
Can you share with us how you're going about marketing your services? When
Sure.
you say,
we tell stories consistently on social media that drive some emotional reaction and drive people to take action.
Staff or anybody?
Now it's my team.
Okay.
For a long time it was me, but I started phasing out probably about 1.5 years ago, and then was basically totally phased out in February of this year.
Nice.
My marketing coordinator, we talk about transformational changes here at the firm, and that was a transformative change. I didn't realize that I could not be in marketing and we could still be very successful. So that was cool. So she was able to do that for me.
Okay. So I know you have a niche or a niche if you're listening in Canada. Okay. Did you have the real estate background before, or did you just wanted to get into it somehow? So you got into it. You hired a salesperson. You're overwhelmed. You start hiring, but the marketing, the organic, like did you just decide to get on a phone and just start making videos of yourself, or did you script this out, or, what was the genesis of it?
So back when I worked at PwC and Ernst & Young, the whole I don't want to work here for 15 years and make partner, I tried to start figuring out how can you not do that? Like how can you leave your corporate job, right? And one of the things that I found through that process was investing in real estate. And so I started building my own real estate portfolio. And through that process, I found Bigger Pockets. And I got addicted to, probably actually addicted if we were to do a real study on it. Got addicted to the dopamine rush of getting the positive feedback when I answered people's tax questions. Yeah. And I was just studying for the CPA at the time, so I was just slightly better at doing the research at the time than the people asking the questions were. But I would go do the research. I would find all the examples and I would paste them into the forums. And people would be like, wow, it's amazing. And then I would be like, oh, I want another hit of that. That was awesome. I don't get any of that at my job. So I'll just do this all day long. That's
a good addiction.
Like,
if we're going to choose, an addiction, that's a good one to have. Like being nice and answering questions for people. But
I love this. You're actually you're sharing knowledge while you're working at PwC, right? That's what's going on. So you're actually finding joy in delivering educational content.
Yeah, 100%. And nobody was really doing it at the time. If you were to Google like real estate professional status or whatever, you would find CPAs talking about it, but they'd paywall their blog, or the article would be way too technical for a layman to understand. And so I just started like dumbing it down for people so that they could actually understand. And I did that through telling stories and just a lot of different examples of this works and this doesn't work. And I gave it all away for free. And people thought that was insane. But my thought was just like, if I give it all away for free, number one, I'm going to get the eyeballs and you're not. That's the premise, right? So they're now spending time with me. They're building a relationship with me. And 10% of those people are going to read it and be like, okay, this person's qualified and I don't want to do all the work, so I'll just hire them. Right. It's the whole goal, right? And so that was the basis of it. And by the way, at the time, I had no idea I was even doing this, to be clear. Right. In retrospect, that was the strategy. But like at the time, there was no strategy. It was just, this is a lot of fun to answer tax questions. I got invited on the Bigger Pockets podcast. That show released, and that's when it all started kicking off. But I mean, to answer your question about the content piece, I used Bigger Pockets platform to build my brand. And I did that for a very long time before I started taking it off of their platform and onto my own website, and my own platform. So it was blogs, newsletters, in the forums, and on their I've been on their podcast like 6 or 7 times at this point.
Well, it seems like you had genuine curiosity, right? And you found something that stuck, which is very, very important. So let's fast forward, and not to where we are today, but most of the firms, most people starting are following the compliance model, right? The governance model, if you will. But just from the little I've spoken with you, it doesn't seem like you're going to be following that model as you're growing. More is like you're leaning more into a consultative model. Did you start doing that from day one, or like? How are you speaking or communicating to your customers?
Yeah, definitely not day one. Day one, I think it was like, I'm going to sell you a tax return in one phone call or something for some extremely low price point, right? as we all do. Over time, I tried the subscription model. So I know that everybody like loves talking about subscribing to a CPA firm. I actually personally hate subscriptions now, and I know there's a lot of people that do hate subscriptions.
I don't like the word.
So I'm glad we don't do that anymore. But at the time, I did a subscription model, and I remember I was charging $150 a month for an annual tax blueprint, two strategy calls, email support, and a tax return up to some certain point. And I was just dying. I mean, it was way too low of a price point. But I remember where I really that was probably 2.5 years. That was 2018. I launched 2016 technically. That was probably into 2018. I had this conversation. I was doing a subscription model, had this conversation with a guy, and he was like, "Man, I want to refer you a client, but your prices are too cheap, so I'm not going to." And I was like, "What do you mean?" And he's like, "Well,
Yeah.
you whether you intend this or not, your prices are so low that they're gonna not think that you work with people like them."
Mhm.
And I was like, "Well, what would they
Price
think?"
dictates
It was like
perception,
4 times.
unfortunately.
Yeah, but it was like
Yeah.
4 times the rate that they were willing to pay, and that was I thought I was good at pricing, and that was like more of a pricing wake up call. So at that point, I shifted my model. I killed the subscription model. I had enough experience with advisory and compliance that I decided I'm not going to do your compliance unless you buy advisory, and we're going to start everybody with advisory. And I committed to always increasing the price point to manage my lead flow and figure out what the market's willing to pay for advisory. So today, if you were to call us up and say, I want to work with you, we would say, cool, it's a minimum $5,500 for 12 months of advisory. And then we'll price your tax returns out and we'll do those separately, typically about 6 months into the relationship. And then we just get on a recurring advisory and tax compliance relationship on an ongoing basis after that.
Regular reoccurring MRR, baby.
Cool.
Yeah. How did you grow the staff to become advisors to help you get to the next
Yeah,
level?
I want to go back to that line of the goal of sales is to overwhelm operations.
Mhm.
And that we hear this so often from our members and from people of hiring is the hardest part, right? Whether it's offshore, onshore, virtual, whatever, the hiring to hit your standards is very difficult. So let's go there.
I think that people think hiring is the hardest part, but sales is the
Mhm.
hardest part. And I think people don't realize that because they think that, hey, I got my 2 leads this week, so I'm doing a good job, and you're not doing a good job if that's what you've got.
Nice.
Like if sales is not stressing you out in terms of how much volume you have, then you have a sales problem and you're not doing a good enough job with sales and marketing. That's my belief system. And when you compare that to fulfillment is infinitely easier to solve
Nice.
because it's systematic. I don't have to go out and source new deals or try to understand the market. It's systematic. There's a job role, there's a job scope, and there's a job price point, and it's pretty public information if you subscribe to various job boards and data research and publications and things like that. So infinitely easier to solve. Now, super hard. I don't want to say hiring is not hard. Hiring is super hard. It's just relative to sales, it's easy.
Yeah.
So the hiring piece, the way that we figured it out is just by making a lot of mistakes. I have probably spent $2 million, just burned the cash because I've just made mistakes over the course of my career. I feel like now I've got it pretty darn figured out. But the biggest learning lesson in all of this, there's two big learning lessons. The first big learning lesson is if you're having trouble hiring high quality talent, you need to increase your price point.
Mm.
So
The salary or the price you're charging?
Salary. Yeah, you have to increase your salary, which probably also means increase your services. Yeah. But
so pay for the better talent.
Yeah, well, and whenever I consult firms, that's just what they all say too. Oh, I can't find good talent. Cool. Show me your job description and show me how much you're willing to pay. And they're like $80,000 for a tax senior. What if you were willing to pay $95,000 for a tax senior though? Because that puts you into a totally different talent pool. And those people, you're not going to have many problems with them. They're going to be able to come in. You got to teach them the job, but they're going to be able to come in and crank.
The problem I see too is that that money is coming out of their own pocket versus preparing to pay somebody that amount from the get-go, like you're talking about, right? Like, hey, let's not restrict the dollars necessarily. Let's get some right people, but let's raise the bar a little bit. And if we know we're raising the bar, looking for great talent, let's start preparing to hire by raising our rates, by adding maybe a new hire account, funding that a little bit when you're ready to go.
Yeah. So here's a way to think about it too. Like if you have somebody that's I can't find talent, well, what are you paying? I'm paying $80,000. That's what I'm willing to pay. Then you could pose the question, well, what if you were willing to pay for the exact same role $110,000? Do you think at that point that you would find some pretty killer talent? Because now you're in New York City marketplace in theory,
Mm-hmm.
right? Like you've got some access to pretty solid talent at that price point. The only answer is yes, I would be able to find better talent. And then the question is exactly what you were just talking about is, well, where does the cash come from? And this is what us accountants get all wrapped up in. And we think, well, it's $110,000. That's a big expense. And the way that I try to help people understand this, it's not $110,000. It's 110,000 divided by 12. That's your monthly cost. That monthly cost is your risk. That is true. So it's, $11,000 a month. That's your risk. But how many months does it take for you to now be fully removed from this process because you've hired somebody high quality, right? Now you're fully removed from the process. How many months does it take for you to break even? Can you claw back 33K in new sales and revenue because you spent more time on marketing because you paid for the $110,000 person? People try to go cheap, and I did too. I started my career hiring associates. I should have, in retrospect, started my career hiring senior managers. You hire a $200,000 person and let them hire the rest of the team. You don't sit there and try to hire a 60K person because every time you go cheap, sure, you save cash flow, but you pay with your time. And that time is super valuable. It's super valuable.
So when in your journey did you realize that? Would you say 5, 7?
Probably about 2020. That's
Okay.
4 years in. Probably about 4.5, 5 years in, somewhere between that time frame. I'd really struggled with talent. Just like I had some good people and some people that are still here today. So
Yeah.
you find them, you find the good people, but
Yeah.
man, like the mediocre people, I was just banging my head against the wall constantly, and learned a lot about accountability and leadership through that process. The second thing I was going to say, the first thing is pay for the right talent, and then the
Yeah.
second thing I was going to say is learn how to actually hold people accountable. Like
Nice.
how many of us keep a bad person on for 12 months just because we don't want to lose them, and who knows what's going to happen to the culture, and that means I have to
There's
do
no
5
one else
extra
out there.
taxes.
It's so hard. It's so, yeah, they love everybody loves them. Really.
Yes, you start going through that enough, and you hone your gut, and that was about 2020, probably 2021 timeframe where I started going, okay, we're going to level this thing up, and I'm going to stop. I'm frankly going to be a little more ruthless is the way that I have to tell myself.
I mean,
because
just like candid. It's business.
care
What's
too
in the
much.
best? What's the
So-
decision that's in the best interest
Yeah.
of the business?
So
That's
thinking
all.
about accountability, again, I talk about this a lot with people, and we talk about scorecards and reviews and really dialing into the details and responsibilities of each position and each person and how they play. What's your accountability model?
My belief is that clarity is kindness. The more clear you can be, the kinder that is. A lot of us, especially with less experience, and again, me as well, a few years ago, you think that being clear is actually being an a-hole, because you kind of sound like one when you are, and you feel like that. But once you train this and you realize that, hey, I'm going to be clear to give you an honest chance, and you have to step up to the plate. So we try to repeat that very often in our firm. We try to kill subjective language. So simple example is, Ron, I need the report next week. Well, next week to you means something totally different than next week means to me. Even if I said, Ron, next Friday, what time next Friday, right? So we're trying to get like super, super granular with our expectations. That's step one. You can't hold anybody accountable unless you start there. But the next piece of accountability is just not tolerating any mediocre performance. And where I've always told myself I'm not going to tolerate mediocre performance, but what I realized over the past probably 18 months is what I've not done, and what has really helped me as a result of realizing this is what I've not done. We always define what success looks like. Here's the expectation. Here's what has to go on the scorecard. Here's what's green. Here's what's yellow. Here's what's red. But like, as long as most of it's green, if you have a red, it's fine. Like, no big deal, right? What I started doing was defining failure. Failure means I'm firing you. And I will tell people that now. So this is success and this is failure, and you cannot fail. And we'll have check-ins on a consistent basis to make sure that we're on track for that. And we do that organization wide now. That's probably the biggest culture shock I would say our new hires have, coming from other firms who are just like, you're accountable to your utilization target, and that's pretty much it. And if you miss it by a bit, it's not a big deal. But here, you're accountable every single week.
Yeah,
If
man,
you
that's
don't
the
produce every
spotlight.
single
Some
week,
people aren't going to, that. Yeah, you
yep,
got to hire smart for that one. Wow.
yep,
This
yep.
was great. We're out of time. Where can our audience find more about you, Brandon, and hire you?
So you can check me out on LinkedIn. I actually don't know what the link is, but Brandon Hall CPA, you'll find me. And then I've got my website is therealestatecpa.com if you're interested in checking out what we do marketing wise. And then I've got a community of firm owners that are doing $1 million plus. And that's 415. So 4 spelled out, the number 15.co.
That's great.
Awesome.
This was awesome. Thank you.
Yeah,
so
a
much.
lot of great information. Stick around. We're going to go through the
2
segments
pages.
here. We got pages of notes to bring back to our
seriously.
team here. Great job, Brandon. Hang tight.
Yeah, that's awesome. Thank you, Brandon.
All right, I've got big news for you. I can finally spill the beans. The Profit First app, already the complete system with goal setting, expense analysis, and me, Mike Michalowicz, guiding you, just got its biggest upgrade yet. Introducing Profit First Bank, powered by Dream First, directly integrated with the app. That means automatic allocations, real-time clarity, and less friction than ever before. If you've been waiting for the perfect time to start your Profit First journey, this is it. Head to profitfirstapp.com to set up your Profit First bank account and experience the upgrade.
All right, Liz.
Man, so many takeaways.
I know.
So many.
Good stuff, right? I mean, so this is firm building. There's a lot of little things in there we could probably have dive really deep into it. But what'd you learn here?
Well, I'm going to go with what he started. I mean, you know how I feel about team and training and all of that stuff. And I've actually been talking so much about team just today. I was on a call first thing this morning, and one of our members fired 2 employees in one day. And it was exactly the way that Brandon was talking about it. Like they failed. And one guy was like, I'm totally blindsided. He's like, I don't know what you've been listening to, but this is unacceptable, which I've told you now for 3 months. It was terrible. So yeah, I could talk about hiring all the time, but he started with, again, it's the simple things, and it's not simple for everybody, but he said he got all these eyeballs on him, because and now what he's doing with his digital marketing is stories that evoke emotion. Stories are easier to remember because people can see themselves there. And then he's evoking an emotion when it's taxes and money and finances. And so they're, underdog stories, I'm sure. And there are stories of overcomers and winning, and then really spooky stories of loss and bankruptcy and all the other things that he's then able to say, and now they're with us and now we're good. So I love that anytime someone harnesses the power of story, it's my people. That's great.
Yeah, no, I got that too. But what really hit me was fulfillment is easier than sales.
Brother.
I'm like, oh my God, people are worried about doing the work, which can be automated, which can be systematized, which can be processed.
That's going on a bumper sticker for me, for sure.
Yeah, you can scale a manufacturer.
Don't come at me with pitchforks.
Yeah.
But it's, again, it's truth. You're a truth teller. Friend.
Yeah, you could scale manufacturing lines easier than you can scale sales in this business, right? And so you don't have a fulfillment issue. You have a sales problem. Mm-hmm. Get sales in the door, and you can easily scale that manufacturing up based upon systems and processes. I'm like, oh my God, people are worried about the wrong thing. They're worried about how am I going to deliver? It's easy to deliver. Yeah.
Well, and I think people think that their process is so unique, right? So we hear the art of bookkeeping and accounting over the science of it. And so they're like, well, ours is super different. You don't know, it's different. It's different. We're different. I have to teach them so much. You're like, no, you don't. And that also is code for, I don't have a system, but it's also code for, I don't have a system. My system isn't working. So it's not the people, it's the system. Like that was great. Fulfillment is systematic. That was good.
I also love clarity is kindness. I got a problem with that too. All my life is my candidness has always gotten me in trouble because I'm pretty sharp and I just direct it. But one of the things is we wouldn't be doing our job if we weren't candid.
Yeah.
right? That's where a lot of people want, and it's not that, we're trying to thumb people down. It's just that we want you to be successful and we're just giving it to you.
Totally.
Right. And so I love
yeah.
that as well. What did you love, audience? Don't forget to send us some feedback, the Grow My Accounting Practice podcast, which you can find on any podcatcher out there.
That's great. All right, Brandon, you're still here. So we have this
Yep.
section called Trippy Questions, and it's like a table talk conversations. And I ask one weird question that has nothing to do with what we were talking about. This one, do you have any superstitions,
Oh,
Mr. Saharian?
I do. I have lots of superstitions,
Yeah?
lots of them.
Which one?
I don't walk under ladders. I avoid black cats. I don't step
What do you
on,
think's going to happen?
I don't
Death?
step on cracks. You know,
But legit, what's going to happen? You're not going to break your mom's back.
my juju. I want my mojo to be positive. I'm not, listen, it's the athlete in me. I got a lot of superstitions, a lot of
That makes sense.
stuff. Yeah, man, I'm not doing anything that's going to upset my mojo.
That's great. Brandon, how about you?
For me, it's don't break mirrors. And
That too.
yeah, don't break mirrors. That's a bad one. And then I've got one
What
more
happens?
that's kind of
7 years.
I don't
back
know.
now.
I haven't broken a mirror. I'm
All
not
right,
gonna
fair
find
enough.
out. I just heard bad things happen. And then I've got a new one. So my son is a 6-year-old. My oldest,
fun.
one of 3, and we got him into watching Carolina Hurricanes hockey, NHL.
Ooh, fun.
Yeah, that's been like the past 12 months or so. So I got him a puck, one of like the pucks from the rink, and now we go and we rub it before the Carolina Hurricanes play.
That's adorable.
raising 'em
That's a
right.
good superstition. I like that one.
What
They're
about
in
you?
like 3rd place, so I think it's
Oh,
working.
good job. And because of you.
It's
Thanks
the
to
puck
you
drop.
guys.
Because of us, yeah.
It's the puck
job.
rub.
None. I don't have any.
What?
Nope. No.
None?
None. I don't
no.
really believe in superstition. No. I appreciate it. I appreciate, like the rhyming of don't step on a crack, you break your mama's back. But no, I don't. No. Nothing.
Whip it good.
I don't have anything.
Yeah.
That's a good one, though. I'd love to. I'm glad to know. Now I can torture you even more, Mr. Saharian.
I know. Wow. Well, hopefully not too many people have those superstitions. All right. Now, Liz, you want to pull out my lightsaber?
I
Get that thing
do. I
going?
do here. Oh, gosh. There it is. Oh, now we can see you. There you go. You
Yeah,
can hear it, but
now
it's-
we actually can see it. All
Yeah.
right, guys. So this is insider access. This is something that we're doing here that you can do in your organization. And one of the things that is to systems, processes, and documentation. It's key to scaling. If you're not good at systems, somebody in your organization must be good at systems and at least documentation. Over here, Erin does all of our documentation. She's able to write those SOPs better than anybody else, and she's able to articulate what comes out of my mouth or what comes out of other people's mouth into a system document that others can follow. In addition to that, we add a video that also describes the system. So not only do we
Nice.
have a Word document, we also have a video that accompanies that. Therefore, it makes middle management less needed because
Yeah.
go to the video library. There
There
you
you
go.
go.
Create your video libraries as well too. Awesome,
That's good.
guys.
Great.
That's it. Brandon,
That's it.
awesome job, buddy. Nice meeting you. Thank you very much. We're going to have to thank Mark Pelberg for referring
Mark
you
and
over to
Petra.
us.
Yep.
Yeah.
Great job there. Audience, thank
Thanks,
you
guys.
again. Don't forget to review and subscribe to Grow My Accounting Practice podcast. And also, what else do they need to do, Liz?
Well, if they would like to learn a little bit more about becoming a Profit First professionals or just a professional or just finding out about this organization, head to profitfirstprofessionals.com and click on that Become a PFP button. And it'll route you to have a call with Ron or with me, and we'll get to know you a little bit, see what's making see what's keeping you up at night and getting you up in the morning, and then see if this might be a fit for you. So if you're interested, profitfirstprofessionals.com, everybody. Have a wonderful day. Thanks so much.
See ya.